is really impact. And what do we mean by impact, just in terms of definition and nomenclature, is generating measurable positive social and environmental outcomes while making financial returns. That's just in terms of perspective. So with respect to how we came about that journey, we've been in the business for almost 27 plus years, building better communities across Canada, US, and Europe. And really the last 3 years, I would say it was really a time of reflection and inflection for us, where we say, okay, the real estate industry is at the intersection of everything that has transpired. And what we choose to do, yes, we have been building better communities, but how do we articulate and really think through that philosophy and integrate it to the whole ecosystem of our firm and our stakeholders around us? And we realize that real estate intersects with social determinants of health, social justice, climate change, and all other aspects, which on the economic aspect, of course. And that led us to Canada's first publicly listed impact vehicle called Dream Impact Trust, our Dream Impact Fund. And we also released our Dream Impact Measurement System. And we wanted to make sure it was open source, so that what we learned through our journey, we wanted to make sure that there is a forum and the system change for everyone. And the 3 verticals that really came about that we are focused on is affordable housing. And I'll speak to in terms of what we mean by affordable, because there's different definitions. Affordable housing. The second is climate resilience and energy efficiency. You cannot speak about affordable housing without speaking about climate resilience and sustainability. And the third is inclusivity. And that third core, or that third pillar, is really what really wraps around the first 2 cores of when we are speaking about affordable housing and about climate resilience. Because from now, we are at that moment in society and an economy where there is a juncture that we are shifting and paradigms and constructs, and who are those leaders that are making a decision. There's a change in the demographic in Canada, in Toronto, and how are we choosing to make sure that those that shift in demographic are part of their decision making, are part of the systemic change in the society and economy. So inclusivity comes really important when we deal with affordable housing and with respect to climate resilience. For Dream, we've been absolutely fortunate to have had great partners in the private sector. But key I have to phrase and I have to impress upon you all is that the success we've been able to achieve in the rental housing sector is really through our partnerships and collaborations with all levels of government. I have to impress upon you that. And the first example really on the new development, and our approach, I'll split it into 2 parts. One is on new development, what we're doing. New development here at the City of Toronto in partnership with Tricon Kilmer, our partners in the West on Lands, Block 8347. I know I'll be talking about a lot of blocks, but mind you, we are a bit more creative than just talking about blocks. Of course, in partnership with Elders Dawn, who's also here, is to create affordable housing on provincial land. And altogether, that will be creating almost around 2,000 units that we will be bringing into the market, which will have different depths of affordability in this project. Again, 2019, and now by next year, mid next year, we will be bringing all the units into market in the sense that they will be units occupying. The second component in terms of how we deal with affordable housing and addressing the challenges is through the existing properties, existing apartments, and that way new developments take longer period of 3 to 5 to 7 years, depending on approvals and depending on the phase of the project, which we address and emphasize. And I would emphasize it's extremely important that we need to have that new supply. The other component about how we're addressing, because of the urgency, is how we are able to repurpose and take existing apartments and instead of making it market, creating affordable housing. And that we were very successful in partnership where we co-created the MLI Select with CMHC and other groups in terms of, okay, we take existing apartments, units, and instead of increasing the rent through that program, and that is really change of incenting the private sector to be part of the solution, creative part of the solution in creating scale, is through where we created it. It's the first project is residences. We had released the press. We had also issued a press release just in terms of speaking to that, and we were extremely pleased with the partnership with the federal government, but also with other non-for-profit sectors, that we were able to create affordable housing, new affordable housing, make the project energy efficient. And Dream has we have a new foundation called Dream Community Foundation, because we know the built environment is one thing about creating affordable housing. But what are the social programs and the support systems that are required after the affordable housing residents are living in those units? So Dream Community Foundation, which was seeded by our founder and chief responsible officer, Michael Cooper's family, are around 25 million. And these were soft programmings that were created so that we can create programs where both residents in the market units as well as those residents in the affordable units can be able to recognize each other as with a great sense of humanity and kinship, because that leads to resilience. So for us, when we talk about impact investing, it's part of every decision and every approach we make. It's not just about bringing new products, but it's the continuum of that participation in those residents and in investing in this community. So I think just in terms of two levels of approaches that we have taken in addressing affordable housing in the rental sector. Sure.
Yeah, thanks so much, Sarah. I think it's really important to Dream's approach and really thinking about the innovations that you're making within your partnerships, but then also how you've really been leading with the urban design component of leading with the landscape first and then building from there. Gautam, when we think about HouseLink and the community homes of Mainstay Housing that joined together just over a year ago to form the largest nonprofit housing supportive agency in Toronto, can you tell us a bit more what you're doing right now?
Yeah, sure. Thanks, Sheila, and Searing lots on the go there. So yeah, so as you mentioned, Sheila, HouseLink and Mainstay Community Housing, we're rebranding next year, but that's our name for now. Emphasis on and. It's an amalgamation between two organizations that are about 45 and 40 years old, funded primarily by the Ministry of Health, to provide housing in the community to people who in the late 70s and early 80s were leaving psychiatric institutions and needing housing in the community. And so both organizations had built up a decent portfolio, at least as far as these things go for nonprofits in Toronto, of real estate, basically over the period of 1977 through to 1997. And so we merged April 1, 2021, and as a result, the joint organization owns about 60 properties containing around 1,100 rental units, and then we also manage some rent supplements that help our clients afford market rent in the private market as well. So we've got about 350 of those. So the joint organization is actually the largest mental health supportive housing agency in the province and possibly in the country, and the largest private nonprofit in the city of any type for now. There were a number of imperatives separately for each HouseLink and Mainstay. One of that led to the decision to merge. But one big one that both organizations shared was a desire, a need to develop more supportive housing to be able to deliver our mission. And I think in your follow-up question, if you ask the one that we had talked about, we can talk some more about some of our plans around that and some of our tactics. But on the development side, unlike some of our private sector partners, we're often funding rich but sort of capital poor, and so making investments to acquire land and fund new construction has been a challenge. We wanted to create a larger asset base that we could leverage to support that shared objective that HouseLink and Mainstay had. And actually, the conversations had started with some conversations at the broader community level, not just organization to organization, about how we might create a sort of a land bank or a pool of assets from across the supportive housing sector. So one key initiative that Mainstay had led was the taking of an inventory of community-owned supportive housing assets. And interestingly, we found that we had about, at the time, about $250 million worth of rooming houses that we owned across the city of Toronto. We also have a smaller number of properties, but larger number of units in purpose-built rental, but a big portfolio of rooming houses across the city. One key initiative that Mainstay was already doing, and it's a process that we're looking to continue, was divesting of some of the rooming houses, and we're using the cash from the sales to fund some of our development work that is underway. We've got about five projects on the go now as a result of being able to free up some capital and free up some equity. So I think the merger is a key initiative. Certainly created a larger balance sheet, but also I think there's it started with some broader work that ended up in a merger between these two organizations, but we're still interested in the potential in the broader community as well. Yeah, and then I could talk about some of our development tactics in your next question. Thanks.
Great, thanks so much. No, I didn't get a chance when I started hearing about 2,000 new rental units. I can that's really a highlighting project. When we think, Nicholas, the launch of Elliston Community Builders Group has really provided advice, development management services to other organizations wishing to deliver community projects such as 140 Martin Street with the Anishinaabe Cree First Nation. But do you want to tell us about some of the innovative news you may have or projects that are going on right now?
Community Builders is a subgroup within Elliston Capital, and Elliston Capital really grew out of the infrastructure space. I think we're the biggest P3 developer for infrastructure in Canada. $20 billion total capital cost to successfully close infra projects, $11 billion of private capital raised for infrastructure. We have a 50% success rate in infra pursuits, and we now have $4 billion total capital costs under management. And then a few years ago, we were kind of looking at the affordable housing space because it was really picking up attention and traction in terms of how private sector could actually contribute more to the space. And a few of us within Elliston Capital said, you know what, we really have to pay attention to this. So a small group of us formed Elliston Community Builders, and we got so much support that Elliston Capital actually restructured to make it a pillar. It used to just be kind of like an umbrella infrastructure development company within Elliston, separate and distinct from the constructor, but we're a vertically integrated shop. So, and a couple of things that brought us there was, we looked at it, we said, public financing, public accountability, transparency, but more importantly, social impact. In the same way that we would approach a hospital within a community, we take the same sensitivities and thoughtfulness into affordable housing. And our mission really is to build scale and capacity for nonprofit organizations and in Indigenous groups. And you referenced the 140 Merton project, and hopefully we can talk about the 60 Caledon project along the way, which are our two flagship projects. But more specifically today, we did announce a partnership with Habitat for Humanity Canada, and we've had the benefit of working with several Habitat local organizations along the way. But this partnership will have Elliston providing advisory services over the next 4 years. And in partnership with Habitat Canada, that will help the local Habitat organizations evaluate how to best build for the most impact on specific pieces of land with a specific regard to planning restrictions, permitted density, potentially available financing. Very, very punchy, strong, evaluative feasibility type work at the beginning of a project that hopefully gets projects off the ground into shovel ready and accelerated home ownership assets. And I just want to say, I know this is about this is primarily focused on rental, but I think it's important for everyone to acknowledge that we are working in a continuum here. And I think that I think all aspects of the continuum, whether it's emergency shelters, transitional housing, supportive, into ownership, and even into market. I think it's awesome to be able to contribute on a national scale with Habitat for Humanity Canada.
Great. Thanks so much for that news. That it's really important when we think about the leadership that each of you and your organizations are taking in this space from a business development side, but then also within the nonprofit side. So, Tsering, let's start off with you. Can you tell us a bit more about Dream's impact investment efforts and your lessons learned about the role of companies like Dream in ensuring that real estate and residential development can contribute to social cohesion, food security, and climate change? You talked about the three pillars in your introduction, but really to think about also to foster a fair and inclusive economy. I know that when we spoke privately, you talked a lot about the innovative partnerships and the way that Dream really takes a keen role, and that's a key area that you actually innovate in with every single project is actually in the partnership development.
No, I think Chirag, absolutely right. I think that um, for us, we have to recognize that. I think we have to recognize that here in Canada, when you look at the macroeconomic indicators or other macro aspects, like our growth is set to lead the G7 over the next 5 years. We are ranked first for peace and second for democracy among G20 countries. We have the highest employment growth. We have the highest population growth. And for us, in that scope and scale of where Canada resides, I think globally, we look pretty comfortable and it looks like we're positioned quite well. With that being said, I think that we do have to recognize that we are talking about housing crisis and affordable housing crisis in particular, and we're dealing with the climate change and we're dealing with other social justice matters. It's about inclusion is incredibly important as to what the success of our country would be in the future, success of our province, our regions, and the cities in the future where majority of the population really comes through. I think when you step back and we look at that, it's like, what does the future of a city looks like in the next 20, 25 years? For 30 years, we are making the decision today. So I think through that lens, when we talk about impact investing, we're really talking about positive contributions about where we see it. But from Dream's perspective, we take a long-term view of value creation for all stakeholders. Because when you take that long-term view, and that's really not really to recognize the incredible power of Indigenous knowledge and the lens about taking the 7th generation views. And that really, like for us, maybe it's not the 7th generation view, but it's just that long-term view about how we are making sure that we are thinking about the climate, when we are thinking about who are the people that are part of those decisions. We are thinking about those who need or require affordable housing and how we are making these decisions. And the built environment is a key component where persons and individuals really reside and thrive. And how's the transit being, making sure that it's close to transit for those who people have to work and live. And I think through that lens and through that scape of background is what are the decisions that we are making in the private sector. And it's not a zero-sum game. And I think that's where the change and the shift in the paradigm and construct really comes about when we think about the society and economy, and especially in the market economy that we are in today, is what are the decisions that we are intentionally choosing to do. So I did mention earlier about our 3 impact vertical cores, just in terms of format. But what we do in our activities, I think it's really important because for us, we focus on intentionality. So what are we intending to contribute? What is the intent of our investment? So I would like to state, like, we do not compromise on financial returns because that leads to the sustainability of this concept as we move forward. The second is we are really focused on measurement. Right? So I think measurement becomes important, what the baseline is and how we are improving, and if we may have to pivot. And as part of our impact methodology, we really look at what our impact pathways are, what our secondary pathway is, like the contribution or effects that happen because of we chose to do, intentionally chose to do. The third is the negative pathways, because we know that what we're choosing to is a new path, is a new field, is something innovative. And there could be things that we didn't perceive or didn't do, or we didn't do it correctly. And I think that's fine. And I think we have to recognize or acknowledge that sometimes certain decisions may not work out, but we will make sure that we are fiduciary responsible, but just making sure as to how we proceed. So just in terms of, I think those become really important when we are making the decisions. So really that is the lens as to how we may be making our decisions on impact. And impact investing, for those who may know or who may not know, is that it stands around close to around 1.64 trillion in assets under management across globally. That's only 1% of the total AUM globally. So it has moved on really well, but it still has a long way to go in terms of what the decisions that we're choosing to make. Think in terms of inclusion when we are talking about affordable housing. I mentioned about when we make sure in terms of the residents, but we are ensuring that there is upward mobility in terms of the residents that live there. And that's why partnership with the non-for-profits, partnership with the resident communities who will have ownership in making sure that those programs that we have in our communities would allow them to succeed and have that upward mobility. The second component about inclusion that's really imperative as part of our impact lens is that social procurement. And I think that's important because we are talking about, we have to do green this, we have to make sure we meet all the requirements, regulatories, but the market is not there. But here is the opportunity. I think it's not a issue. I think here is that opportunity, because as we choose to make the decisions in our procurement, how are we ensuring that those who are marginalized communities or equity seeking groups are part or have access to be part of these decisions? Because sometimes when trades and contractors come about, it might be the same group of players. So we have a strong social procurement. 20% of our value of all our contracts by 2025, we want to make sure that it is to marginalized and equity seeking groups and Indigenous. So I think for us here in Canada, for us at Dream, I think it is imperative when we make all our decisions, we make sure that we are cognizant of our stakeholders and how we're choosing to do. And I think that also resides when we're talking about sustainability. We want to make sure that our affordable housing buildings are also climate resilient, so there is no cost in the future for the residents. And we've successfully been able to achieve that with financial returns. At Zibi, it's not in Toronto, but it's in Ottawa that we have invested, and we've worked quite successfully because it is a carbon neutral community there. Sheila?
Yeah, I was going to say, as someone who thinks a lot about measurement and the importance of measuring things and the choice of what to measure, can you unpack that a little bit of how do you feel like what you're measuring may be different than what you were measuring before or at Dream, or what other people may be measuring?
I think it's a great question, and not to rate questions being good or bad, but I think it's absolutely something that we are cognizant of as to what the data. So there are some requirements in terms of, we are part of the operating principles of management, of impact management. There are other requirements, so we do have to make sure that those regulatory requirements of management, because we are part of this framework or signatories are part of those frameworks, they are set requirements. But from our perspective is really, and is in terms of climate resilience and energy efficiencies. I think that's the pretty straightforward one that you can really measure in the data sets. You're talking about energy efficiencies, about energy intensity, and about reduction of GHG, etc. I think that's pretty straightforward, and that I think it's pretty standardized and unanimous in terms of. I think in terms of affordable housing, the number of units, the depth of affordability and the duration of affordability comes a key component. The other aspect that we really do measure is in terms of what we're looking at in terms of the definition of affordability. For Dream, we use affordability. There's a spectrum. I think Nicholas really provided a great viewpoint. There's a continuum of housing. The housing continuum is quite large, and for us, we really fall in between, where we have units that are based on 30% of MMR, but also at 100% of AMR. So really, or some of them are at 40%. So there is a whole continuum that we look at, depending on the need of the communities where we work at, but also in terms of how we can structure the capital programs. So that's in terms of affordable housing. In terms of inclusivity, that's the challenge. It's like, how do you measure that? Because inclusivity and diversity can mean so many. So we really started off, we have, in terms of a board, the independent board members as well as gender diversity is almost like 50-50 in our boards, in most of our public entity boards. I would say all of our public entity boards, but also within our teams. So we have around between 47, I think it's around I think it's maybe close to around 50-50 between men and women in our team. So that's something that we can measure and we can quantify and we look at. But we also look at the mobility of our management team from what's junior to the level and making sure that we have a pipeline. The third component is really on inclusion is our social procurement. We've really commenced that work. The team has commenced that work in terms of reaching out to the vendors. And that's something we will continue to track and measure in terms of the total value per contract and where we're going to be. Other than that, I would say that the challenge in terms of upward mobility and all, those are longitudinal studies that we would be endeavoring to do. But I think that's something that I would say. So just being able to unpack it within the three verticals, Sheila, I hope that addresses your question.
No, I just think as someone that's really interested in measurement, I know we're going to be talking a bit later about affordability and the definition of affordability and what that really means broadly. But I think it's really interesting, you know, Nicholas, you spoke a lot about the leadership that Ellis Don is taking as a, you know, a true leadership role in this space. You know, it's a very large company, large balance sheet. You know, can you really think about how community builders and your organization can help the rental situation in Toronto? And then also, how have you approached the purpose-built rental developments in the city? And what is sort of the innovative pieces that you can think about what you're measuring, how you're doing things differently as well?
Sure. Yeah, and I just wanted to just echo one thing that Siren was just mentioned, which is the measurability and the intentionality of it all. And as I answer this question, I want to reference the sustainability piece itself of, you know, if you look at what emissions by sector, I think the construction industry is tops. Like there's a way to count it where when I say we, the representatives of the construction industry are at like 85% if you go line by line, energy, direct industrial waste, transport, and all these types of things. So I just wanted to say that to meet Siren's and Dream's kind of you know, a capital investment you know, profile, we're the ones on the ground that need to execute. And so in doing so, we've created a sustainable building solutions group that has committed to the 2050 net zero emission standard. That's what we're aiming for with, and we're developing milestones right now to have identifiable milestones by 2030, which is a pretty daunting task. But that's what we're doing because we want to make sure that it is measurable and things are getting done. It's not just corporate speak to do so. And then so moving into the rental or the purpose-driven rental and what we've done in the GTA, I'll say one thing. It's actually a huge delight to work in the not-for-profit space, the Indigenous space, because they have the view of sustainable assets because they are long-term holders. So this is very different than traditional real estate where you build, you get to your stabilization period, you withdraw your equity and you move on to the next project and you don't take into consideration what happens for the next 20, 30, 40, 50 years during the affordability period. So that's why we put our clients, the NPOs and the Indigenous groups at the forefront because they actually do have the appetite to look at, you know, capital expenditure, for instance, to get to a higher sustainably level, to get to passive house, to get to net zero, because not only is that socially responsible, but it also preserves the assets for operationally for the generations to come, because that's what we have to consider are the generations within these assets, and that's the perspective that we've taken. In terms of direct contributions and direct involvement, I think that there's a bit of a paradigm shift in terms of how Create TO and Housing Now and the Housing Secretariat has started looking at housing. One of the examples I'll give is the Quayside project. We were very, very encouraged by how there was a component within the private developer that was specifically responsible for liaising with the nonprofit you know, participant. And during that, the way that was procured, it wasn't actually identified during the procurement. I think that was going to be identified NPO or NPOs would be brought in at some point. But to be part of that developer box as an NPO advocate in that regard, I think that's actually a very, very positive step. And I hope that continues because I think until only recently, it's been, you know, we're going to do this traditional kind of real estate thing and pack in some affordable housing. And we don't know how that's going to look. And it's been separate and distinct. And I think the holistic piece of this is to actually look at it. Actually, pragmatically speaking, it doesn't work that way. Once you pro forma and everything like that, you have to take into consideration those social impacts and the environmental impacts and everything like that, which permeates through an entire asset, quite frankly. In the Merton project, you know, what we're really focusing on there is end user. We're really working backwards from who is going to live there, what do they need. The public consultations will happen, but in addition to that, we're really looking at the Missinaibi community. I don't know if perhaps you saw the announcement or not when John Tory was there, but it was super impressive. They had about 100 to 130 members of their community show up just to be in a parking lot, just to see what this is going to look like. So the contributions is in terms of what we're looking at right now. I think first and foremost is we look at the mission and the ambitions of our developer NPO or Indigenous group, and we really stand behind them with scale and capacity. We are not driving it from a pure, like a traditional developer perspective where we want to compartmentalize what that vision is and kind of work it into a grander asset. What we do is we support them with our financial advisory, with our sustainability, with whatever they want from Elliston. We're a vertically integrated company. We actualize what they want to have. And the key piece, I think, is to consult with those people that will likely live in the building. And that's kind of the value proposition that we put out to those that want to work with us. We are not going to be bullish and lead and press upon something that doesn't work for them. Quite vice versa. We want to use that feedback loop in the same way we would build a hospital with those that we're building it for. So hopefully that answers your question.
No, thanks so much. I think it's really important to hear from each of you of who you're working with is sort of stepping forward in a leadership role, considering things differently and moving forward from there. So Gautam, when we think about your organization pursuing a plan to leverage your collective asset, you know, in some ways it is this partnership, it is this tighter way that you're working with your clientele and have, you know, together with HouseLink over many, many years, you know, to build the more stable, inclusive communities where everyone can thrive. With this move, do you see your organization as being better positioned to build more affordable and rental housing and supportive housing?
Yes. I'm just kidding. I wish I didn't have to go last with this one, because as I listen to Sarah and Nick speak, I think, oh, you know, I have to sort of remember that and maybe say something about it. But no, to your question, I think a simple answer is yes. But to unpack it a bit, maybe I'll just go back to your question comment about inclusion. So I mentioned that you know, tactically what it means for us. I mentioned that in our portfolio we've got a bunch of rooming houses, and we started selling them so that we've got some equity on hand to invest in new projects. You know, it's not a straightforward thing for a nonprofit to sell real estate. You know, once you sell it, it's sort of gone forever. And, you know, I think these houses, of course, they tend to get bought by investors, not by other nonprofits. But you know, for us, like we're housing people coming from homelessness and dealing with some particular mental health and addictions challenges. And for our program anyways, you know, we find that sharing kitchens and sharing bathrooms is really challenging for people. And so we're really focused on sort of redeploying that equity that we've built up into buildings that are going to be accessible and where people have, you know, privacy and high quality accommodations. The other thing about inclusion though is that our current portfolio, all the units that we own anyways, all the buildings that we own, everyone living in them is, you know, sort of eligible in the same way, right? So we call them dedicated supportive housing, and everybody's got identified with mental health or addictions issues. For the vast majority of our tenants, if not on day one, certainly pretty soon after they have stable housing with us, for many of them end up that they could be tenants anywhere if not for their very, very low income levels. And for some, I think living in dedicated supportive housing with us, like the building can have some stigma, and, you know, living there could be stigmatizing. So, you know, like when we look at, in terms of our goal to build inclusive communities or mixed income communities, it's really mission driven for us in terms of providing the opportunity for our clients to live where people with greater means can live. We're also really excited by the prospect of dealing with market renters who can vote with their feet if we do a bad job, and then our clients sort of benefit from us needing to have a strong game as a rental operator. I think, you know, I think to Nick's comment, like I agree, you know, I think in Toronto we need more of everything as far as housing goes, and we're all working on that in different ways. But for me, pretty acutely, and obviously I'm biased here, but you know, when I look at other jurisdictions, including in Canada, I think our nonprofit sector is sort of the most disaggregated. But you know, at least across Ontario, it's like this. But you look at other provinces and you look at other big cities around the world. The nonprofit sector is sort of a bigger player in the solution to local supply challenges. So I think in terms of being better positioned, yeah, I think, you know, we needed to get bigger to continue getting bigger. We need new ways to access capital. We don't really have private capital investing in us the same way, so it has to come through predominantly through government. And I think there's a unique opportunity for us right now, where you know, coming out of a generally long period of really low rates, of course, into a high rate environment, massive inflation, and land prices tending to hold. And then on the other side, like one, I think, notable thing with the new housing bill is the provincial government's going to make municipalities, and I think Toronto was probably, you know, not to speak for the Secretariat, going to get there too, but to provide DC exemptions to nonprofits regardless of the rent level. So there's an opportunity for the municipality to, you know, work even more with nonprofits in developing mixed income housing. I think our pro formas should look a bit better than pro formas where there needs to be a return on investment. And, you know, I think at the same time, when you look at Housing Now and some other examples that were provided, I think in total, all of that, there is an opportunity to really focus public land development, housing development on public lands, especially rental, in the nonprofit sector. So we're doing what we can to be positioned to be that partner, and I think it's you know, significant nonprofit developers sorely needed in the city.
Thanks so much for the time. I know you were sort of hinting towards CMHC and thinking about the Rapid Housing Initiative as the first program really since the 1990s that sort of allowed for the purchase of land and also the building. And I know, Nick, you were also really interested in this as well, to think about, you know, CMHC is repivoting and how products have procured has really changed a lot in the last 60 days. A lot's changed recently in the last couple of months also with interests. How is that repositioning Ellis Don's initiatives over the next little while, and sort of the impact of your strategy and pipeline?
Yeah, that's a loaded question, because you try to aggregate all of your project experiences into some generalities, and maybe I won't do that just yet, and I'll explain. Okay, for example, our little group started in, I'd say, ended in 2019, 20, or January 2020, around there. And since then, you know, fabricated metal and construction materials have increased by 44%. And that's up until Q3 this year, approximately. Interest rates at the time that we started, prime rate was at 3.95. It's now at 5.95. Our 10-year government of Canada rate, which is a very, very key rate for the stress test, right now is at 3 for CMHC co-investment. A couple other things like supply chain, which really, the problems really peaked in January 2021, and have softened in terms of the that, but has never gone to pre-pandemic levels. And you know what I just picked one project, what the impact was, and I can't give the name of the project. That would, you're looking at hard costs that went from 300 per square foot to 443. That's a 47% increase. Some of it was changes in scope. So, you know, when you put it into real dollars, the funding gap, the gap that's expected from our MPO partners, went up 130%. Okay, so what you could, and I just want to say one thing, like the perseverance and the steadfastness that our clients have is just incredible, because they, first of all, they have the wherewithal, second of all, they have the expertise, which is fantastic. But that is a huge gap. It's happening across the board in projects across Canada, and it's a lot to ask for nonprofit organizations to pick up. Like, if you thought of a pie chart, they're getting all the pie. You know, nothing else moved in that respect. So what that means is that, you know, we have a lot of clients that are looking at smaller projects, and the way that it changed our strategy and our pipeline is that we retain them, but we're starting to have more honest conversations, particularly with newer clients, and especially with Rapid Housing Initiative approaching, and with the application, you know, start on December 12th. We do very choppy advisory services in terms of feasibility. We give very, very honest, objective analyses. If they have 2 or 3 pieces of land, you know, available to themselves, or if they think it's available from the city or from a province, we provide services to say this works or it doesn't work, or here are your obstacles and things like that. So what has happened is that we, you know, 2 years ago, we really focused on the development management piece. Anytime we would get into a project with a client, we would say, we're here for the long run. We still can be, but we are really shifting into the advisory piece to get through, not just on a project specific basis, but we are working with our clients. Sometimes they'll ask, say, okay, organizationally, we have this portfolio of assets or properties. Can you tell us what ones might work and what might not? And that kind of, and I would call it academic, but it's very, very front end. It's very honest. And a lot of the strategy that we're having right now is that, can we make this work? And if not, then we tell them that, as opposed to trying to push everything as we did in 2020, 2021. And that has really changed. And we like providing those services. We'd rather have a project, every project works right to the shovel. But that's how we've changed our strategy. That's what we're doing a lot of right now.
I think if there's anything I learned in real estate finance classes, it was that the decisions that you make about the project at the beginning and the first 30 days are probably the ones that are going to, the ones that are going to impact the project the most. So I think your advisory role is saying, if you know, when you put which projects naturally have can meet the client's goals at this point in time. I'm going to sort of go back to you, Gautam, now, and then to Searing, but you know, to think about, you know, how has RHI really changed how you can work with Mainstay and HouseLink together now that you have a wider suite of things that you're able to fund through the purchasing of land, building, contingency, design. I know that that's some of the things that the communities I work with are really excited in talking about. Can you elaborate on that, how it's sort of changing your strategy or pipeline?
Actually, not so much, to be honest. I think our strategy, and you know, sort of continues, was developed well before you know, COVID, right, and then RHI getting dreamed up. And in fact, we pivoted because we were sort of single-minded. And then Mira was another thing that happened after the multi-unit residential acquisition program, where we pivoted again. But initially, we're like sort of the next comments about, like, do you just dig in and keep going, and then eventually things work out. And I think if we had sort of done things that way, we would have been sort of single-minded about trying to either acquire land or through Housing Now with projects that were in the 100 to 200 unit range, ideally, only. And so, you know, with RHI, we then actually went out and bought some land where we could do a smaller dedicated supportive housing project with RHI funding. But again, you know, to my earlier comments, we've got a portfolio of dedicated supportive housing, and we do not have a portfolio of mixed income housing where our supportive housing clients can live. So for us to really diversify our asset base, I think we've got to do stuff that RHI doesn't quite support, and it's more co-investment fund, you know, under the current NHS programs. So yeah, and then with Mira, again, you know, our mandate has not been preservation, and it's not affordable housing. It really is about housing for people coming out of homelessness and dealing with mental health and addictions issues. But then, you know, the opportunity to you know, again, to diversify our asset base. So, you know, with a grant to go out buy sort of naturally occurring affordable housing with some in situ tenants. And you know, unlike some other, not on the call, but unlike some of our competitors for that asset class, like we're going to do our best to keep these people happy. And then as they move out organically, we would backfill them with our clients up to a point where we've got a healthy mix in the building. So it's sort of the other way around, where I think we've pivoted as these opportunities have come up, but in the longer term, we're really continue to focus on larger projects with a greater diversity of in the community.
Thanks so much. Serena, we didn't get a chance to speak, but when we think about government programs working with affordable housing, is there anything that has really changed your strategy over sort of the last 60 days of thinking about that? Or if not, I can move on to another question too, not to put you in.
Oh, I think that nothing has really changed in the last 60 days. I would say I think we've all been, first of all, impact, as part of our impact mandate, affordable housing is a key component. So that's part of our core strategy. So I don't think that's going to change in terms of our mindset. I think it is a new environment, economic environment, what we're choosing to do. But I think that we also recognize that we know there's going to be a greater need and what that opportunity is. So from our perspective, affordable housing is not a social cost, but it's a social investment. And for us, we see it from a larger aspect of, for us, a key driver is sustainable development's goal number 11, which is sustainable cities and communities. And for us in the private sector, because we take that long-term view, we feel that affordable housing is an investment. So I think that just in terms of the government program, I think it's incredibly important that all levels really work together, because if things slow down in providing the supply on affordable housing, housing affordability is another matter, but I'm just talking about affordable housing right now, as that's the conversation, is that I think it's really important, because what are the levers? Because if Mainstay chooses, because of the pressures on economic financial pressures, if they slow down, what would be that impact? And it compounds. If Ellis Dawn pauses because it doesn't work, if Dream pauses if it doesn't, or other sectors, that scale is needed. We're talking about 1.4 million houses. It takes 5 to 7 years to build, right? Yes. So I think that we have to recognize that, yes, there's private sectors, there's non-for-profits, that's how we work together to create that scale. Because if we can't address that 1.5, when we have the 500,000 new immigrants coming to this country by 2025 and annual, I think 463,000 next year, and then it's 500,000, like, we need the home. And if we want Canada to continue to be the economic engine and thriving, like, the crux is, like, people need homes, and that will set us apart. So what are we choosing to? So I think it's important that, yes, it's an economic environment where the rates are high, where performers don't work. But I think that's where there are programs, there are levers that just needs to be tweaked within all levels of government that could help it work. And having the political will to work together to create the solutions. When you have, like, just the three of us here, and you're part of the academic institutions, is that the conversations are almost the same amongst us. So, like, how do we choose to get all levels to come together and say, okay, here's the problem, here's the solution? It's not as simple, but I think that we have to recognize that the urgency is not diminished. It's in fact that it's higher right now. But we have to be realistic. It's right now, if performers don't work, like, how do we make it work, but how do we continue to build? I think that way government programs are important. I think we cannot be stuck by underwriting parameters. And I don't think we can be stuck by other aspects, but what are we choosing to make the decisions in this changed environment and how we proceed is that's our moral imperative as citizens, right? And with our professional background, what are we choosing to do? Because climate change is one thing, right? We can say it was our parents. My 16 and 14-year-old asked me, it's like, Mom, like, what are you choosing to do in the decisions that you make today for their future? And I think that's so powerful, because if the kids are making you feel accountable, and the decisions that we make personally and professionally is something that's going to impact them. So I think that we want to make sure that the decisions that we are collectively making in the private sector, not-for-profit, and in governments is something that we have to be extremely intentional and mindful of. So I think that's my view.
Right. Well, I know later on in the call, I'm going to ask you each for your top wish list thing, but I'm going to ask you, maybe because we had a great discussion before this call, but what's your top wish list thing that you would ask of the RHI program? I know that we talked a little bit about timing before, panelization, the push towards modular. Nick, do you want to lead into that a little bit and then go, Tim?
Yeah, sure. I mean, I think this round, there's a couple beneficial changes in my view. The first one is quite obvious. It's you get for 6 months. You know, you have now instead of 12. I think that the commitment to modular exclusively in round one maybe wasn't as helpful as they had planned. I mean, modular can be faster, but it's not in all circumstances. And during that time, and we have a modular factory, right? We ended up building, and we met the schedule. Our baseline road project in London, Ontario met its schedule. We built 61 units within the requisite time, but we didn't use our modular factory. We actually used Canada and Hambro, and they did a great job. But we scrambled to get there. I think the wish list there is not create too many hurdles. It's always been, you know, have shovel ready land. Hopefully there's some sort of design process that you can pick up and build these types of things. But if that's there, you know, to get through the RHI application process, it should be fast, quick, and certain as to whether a proponent will get that funding. And then I think the wish list that I would have in my experience in doing it is that you need really, really good municipal partners. I think we have what we have. This is my point, that we have what we have under RHI round 3 from CMHC. It's set in stone. And then it translates into municipalities really picking that up, whether it's the project stream or the municipal stream, to work quickly with those that can actually build. And really, really focus on execution. It's kind of an amorphous answer, but really, once those applications go in, prioritize those teams that don't have much obstacle, but don't over obstacle them, and really look at execution. Can they actually build? Are they ready to go? And that's at a municipal level. So it's more of a municipal, you know, request than it is from any higher policy kind of perspective.
Thanks a lot, Greg. I think that's really important to know that, you know, that Ellis Don has that modular factory, and they weren't able to actually use their own piece to be able to make that. And how do I say this? You're such a large player within the communities within infrastructure. So if you can't make the deadlines, then I think it's also a great voice to think of that extra 6 months is really important. And specifically, maybe when I'm building in the north, that we need to think about northern schedules as well. I'll put my own little piece in there about how a northern schedule can actually change things a lot.
Yeah, and we build in the north, and we, like, logistically we can, you know, we can do it. And I think that you need flexibility though. I think that to over program something, you know, because you want to meet the ideals of a program or of the initiative, can really shackle once you get to the execution stage. And that's kind of where we sit in a you know, I'll tell you, Ellis Don Community Builders does not get involved in a rapid housing initiative because we're on the development side. That requires a very, very you know, quick and punchy design build process. But at that point, we're out of that. Like, so, you know, we hand that off to a constructor, they do a great job. but you're right. Like, and that's my point. Don't overshackle. Don't overcomplicate these things. That money's there. You got to build. Get building. Like you got 18 months. Just do it.
Awesome. When I asked the question, you got a big smile on your face.
Oh
It
yeah,
seems like
because
you've
I
got a
meant
big
to say
answer.
about I meant to say about RHI earlier actually. So although we did pivot, I think we still stuck to our guns, and we didn't get RHI round 1 or 2, partly because of that. We stuck to our guns in terms of our criteria, our standards, our definition of quality rental housing. I think people may have different definitions, but for us, we really wanted to do if we could do a project with RHI that if we didn't get RHI would still be a project we'd want to do with co-investment fund. That was sort of one of the things, one of our criteria, and and then I think although mixed income is something we want to do, if it is dedicated supportive housing, still that emphasis on accessibility, it's a huge issue for really low income populations needing housing. And decent unit sizes, right? And I think if you care about quality, quality, want something to be good, I guess, for RHI, this is really, whatever, what's the word? It's, it's trite, but you can either do fast or cheap, right? And I think, I don't think that there's enough RHI funding in Toronto and other big urban centers, and then you're still trying to do fast. So I guess the question I'd ask is, are we delivering the quality of housing for this homeless population that we want to? And in general, we're so behind the ball with our lowest income community members in Toronto that we're always playing catch up and trying to do the fastest thing. And so I think, in general, my feedback to CMHC and the province for housing in Toronto is we got to put more money into the system if we want to do good quality housing for this population.
Thanks so much.
And fast, yeah.
I was going to say good, fast, and cheap. You can only have two, maybe not even two. So all of you have talked a little bit about, climate resiliency, affordable communities, inclusion. Let's pivot a bit to think about some of the City of Toronto initiatives when we think about social infrastructure to support growth of the population in Toronto. The idea of the missing middle, and when I say missing middle, I'll put the definition out and say that I'm thinking up to 6 to 8 stories, not only sort of a 3-story type of detached housing, but when we think about sort of the missing middle continuum, again, if we think about that, the city as a continuum, how do you think many times affordable housing and missing middle are put together so as these two things to be accomplished at the same time. Is that a realistic expectation, or what kind of projects have you been doing or working on in certain places that are bringing that type of density?
I'd be happy to jump on that. I think for us here in Toronto, I think, should I just say that missing middle you went up to 68 stories? I just wanted to check if I heard that.
6 to 8, not 68.
6 to 8.
That would definitely be a different. That would be definitely a new McCartney definition of missing.
Like, I'll make sure I want to get the nomenclature right, because in case I was like, okay, I think that for us, it's most of our buildings, I would say, would be above the 6 to 8 buildings, but I do recognize, I think that it's an important aspect just in terms of the housing product that needs to be developed and being done. I think for us, where we've been very fortunate just in terms of not really up to the 8-story, but a little bit more than that is in Ottawa and Gatineau. They've been very fortunate in terms of building. So it's a carbon neutral, so it's energy efficient, it's net zero, and we have affordable housing there. And it's checkered. And I think to Gautam's point, I think for us, we want to make sure the grace and dignity for all residents are also reflected in the product and in the finishes of the home. So it is checkered, so no one knows who's what. The other component is you cannot distinguish in terms of the finishes and features, because for us, because we are part of the One Planet requirements, there's a requirement just in terms of the materials and finishes, etc., that's required for all unit types. So I think that for us, I think it's an important product type. Again, we recognize the space we are in and we are not, and we are happy to say I want to be upfront and say that's not the space we are in, but we have done where it's more about maybe 12, 14, and right now maybe up to 30 to 35 stories that we're doing in Ottawa-Gatineau and the LeBreton Library parcel, which we've been fortunate. We're working in partnership with the Multi-Faith Housing Initiative, which is an absolute grassroots organization where we have, again, affordability, where we, in that building, it will have a continuum of affordable housing where there will be support systems from 59% of median market renter income. I just want to be clear, it's renter income, which is extremely low, right, to around 79% of median renter income. So that is the housing continuum, and it will be vertical. There'll be public realm, and also that's going to be a net zero project. So I think that we recognize for different geography, for different communities, there's that need of that product type. And I think it's great that what the city is pushing for there too.
I would think of in terms of sort of urban planning and urban design of already using places that have the social infrastructure embedded within them. Gautam, did you want to comment on the missing middle and thinking about your development?
Yeah, the project we're currently working on that we're hoping will attract RHI funding in the next round would be a missing middle project. So I think, you know, we're also trying to get to a larger scale, so that we, you know, in terms of a mixed income community with a number of supportive housing tenants in it, you know, we need an economy of scale on the support side as well. So if you're doing sort of a 20, 30, 40 unit building, can we have an effective mix and deliver, you know, provide for economy on our support services side as well? It's more challenging, but it's a decent scale for an RHI type project for sure. And that's one that we're working on. It's a 6-story on main arterial road down here in Etobicoke.
Terrific. Thanks so much. I know, Nick, you were talking about some of the projects that you were doing around stack towns.
Yeah, so I mean, first of all, I'll say, like, you know, Merton Street will probably be a 12-story build, so it doesn't fit within that profile. And I'll just be candid, you know, with the size of our constructor arm in the GTA, there's only a select set of circumstances where we can take full development lead, because we work with the Kilmers and the Tricons and the like, right? So that project we were able to take the lead, but you know, in a lot of ways we're just following what our clients are doing from a constructor perspective. So and Merton's the only street that we have that profile on. But in the Caledon project, I guess you could consider it that if you kind of think of it an equivalent size and scale of Toronto. It's a 7.5 acre site, which actually does allow us to have a bit of a flatter build. So you get 4 to 6 stories with quite an extensive row of stacked towns. And it does have the profile of missing middle. What's interesting about that project is it's 100% affordable, but the way that the city of Hamilton actually procured it is that affordable is defined from 80% AMR up to 120% AMR. So that fits within the parameters of affordable, but the people, the tenants will, there's going to be quite a bit of variation in terms of what the income levels will be. But the point, and that's going to be a net zero carbon project. But you know, there's no, and as Searing was saying, there's no variability in the finishings. There's no like it is the same throughout. Every unit will be as quality as the next. So I think that's and we really, you know, especially because of the last 60 days, we really are looking at like how those stacked homes look. Like, what are we going to do with those? How are we going to, like, what are we expecting the tenancy to look like? And do we sever, and all these different kinds of discussions to have. And I think, and more as things get a little bit uncertain on the CMHC side, or for instance, it becomes more and more missing middle in my view. Like, I think that's probably the most emblematic project that we have there. And I think it fits really well into the neighborhood. It is close to good transportation, and we do have to do some civil works there to improve the infrastructure of the lot. But I think that our Caledon project is probably the most emblematic of a missing middle. So certainly, I think the question was, do you think it's possible? I'm not going to be the one to say no, just by the nature of the question. But I think we're doing it there.
Well, I think it's really great to see examples where it's happening, because I know that it sort of has proven to be quite challenging in many places to not have as high density. Just maybe before we move into audience questions, we've talked a lot about the role of government to incent different behaviors, the push of regulation to sort of change behaviors, capital things. What's the one wish list thing that if you could change or ask for? We are seeing on a call with people from government, people from banks, different other regulators to incent things. What is the one thing that you would wish for to bring about the future of rental housing in Toronto?
I'm happy to jump. It's
Sorry, I was about to say Syrian. I was looking to see whose eyes were lighting up and whose wasn't. Syrian?
it's I know it may sound a bit right, but I would just say collaboration, because I think that we underestimate the tools that financial institutions. There's been a lot of pledges, all levels of government. There's different tools and levers, not-for-profits and the private sector and builders too, as to what we can do to create that scale. And I think that we underestimate what that could do to be able to solve it. Because I think there's a lot of conversations happening, but there's a disconnect.
Great. Thanks so much.
Okay, go ahead, Nick.
Okay, yeah, just
Yeah.
I don't want you to steal any good ideas, and then no,
I was just gonna say I agree with these guys. Yeah.
actually, just to follow that point, I think more specifically, being in the infrastructure space prior to this, and making that transition, through the early 2000s until well, not too long ago, there was a lot of collaboration in the private sector, whether it was from lenders, equity providers, life co's, pensions, all those different types of things. And if it's done the right way, I'm a firm believer that that sector can do a lot more. I was asked I was kind of joined I forget what it was called, but it was called Champion Circle for an MPO, and they said, and the question was like, what is advocacy? And a lot of people think of advocacy in the way that you go to governments or you go to municipalities, you lobby and all that kind of stuff. And the point that I made is that I think there's a lot of work that could be done in the private financing sector to lobby them or to advocate that they need to tastefully enter into this sector. I think the returns are there for, that's obviously something that's important to them, but it has more of an investment profile that they might have an appetite for, particularly given the environment. And the big thing I would like to see is those, those that invested in infrastructure and those that invested along those P3 lines consider this space tastefully and are respectful of the governance and the ownership models, but take a good look at the sector en masse and consider whether it's a good thing for them. And that's the big wish list for me.
I got three.
Gotham, three.
I got three. Yeah. So some we're already doing, right. So I think investments from government in the form, waivers, tax relief, and loans. And I think actually more can be done. Should be done by the feds on tax relief, and I think that should be available for anyone developing affordable housing in major urban centers in Canada, where we've got affordability problems right across the country, and then grants and land for nonprofits, not for any developer. And then, so that's two. And then the really big one though, so I sort of cheated, but I really think what we need from government is more income support for renters. Like, I think we try to make pro formas work with market or discounted from market rents. And that's sort of rent levels in the absence of RGI, rent levels in operating funding that we need to operate these buildings and service debt. But and in some cases, we've got investors who need a return. But the rents have to work for people who need the housing, and we're really failing in that regard in Ontario.
Great, thanks so much. I think that's really important that you've all outlined different ways that actually all the different sectors can come together. Collaboration between many different financing, private public partnerships. When we think about different collaborations and what incents them to come together, the sort of private financing sector, of thinking those that really funded infrastructure and tax relief and income support, it's really thinking about multi-pronged from many different directions. I was looking out for questions from the audience. Oh, and I didn't think there was some in, but there is some coming in. So one of the questions is, do you think inclusionary zoning will be successful in Toronto to deliver affordable housing we need based on what you're seeing in the market these days? There's a number of different questions, so maybe we could have, if someone really feels pulled to a question, they could answer that one. So do you think inclusionary zoning will be successful in Toronto to deliver the affordable housing based on what you're seeing in the market these days? It's a bit of a different product than what many of you are working on right now, which is rental housing specifically. Anyone feel like they can answer that one?
Yeah, I think it's a tool, and I think it will move the needle a little bit, but I certainly don't think that it's going to meet. It's not going to have a substantial impact to the extent that maybe the most stringent proponents would assume. I haven't seen. It's hard to. You need case studies. I think we haven't seen any of that yet. So it's a very not an academic question. I don't mean to say that, but it's hard to forecast to see how developers will actually work with inclusionary zoning, and I think that we should be conservative about its impact until we actually see a project that moves with it.
Yeah, and to the person in the audience, there is lots of case studies of other cities, such as Boston's a great example, or Montreal. One of the advantages is there has been a lot of units that have been created, but it's also quite difficult because they don't necessarily have a long-term horizon on them, and we don't actually have the infrastructure within our municipalities to manage those units. One of the advantages that we've heard all the speakers talk about today is being those long-term partnerships. They're there with long-term goals because they are partners for the long term. And when we think about many of these other projects that have inclusionary zoning, they typically are with people that are building something and then removing their investments from them. And so what happens to those units, they can kind of get lost in the system. And sometimes they only have a 20-year horizon on them. And I would hope that all of the units that we're talking about today have a longer horizon. I just don't think it's a silver bullet. And I think, just to echo what Nick said, it's, a tool that can be used, but we need to think about any different tools that are used to create housing across Toronto. So this one question specifically Gotham. What do you think the nonprofit sector needs to be able to scale up delivery of housing?
I should send that question to Sarah and Nick, actually, right? Because I'm in it. I can just say that what we're doing is we're doing the what we think we need to do to position ourselves to develop housing within the current environment and with the programs that are available and that we think will continue to be available. I think over the years, like we talk a lot about the nonprofit capacity, which I'm not 100% sure what exactly is meant by that. Like, is it capital? Is it our competencies and our skills? Is it our relationships? Is it all of it? But there are different ways to get around all of those challenges, and I think often, like the competency piece and capacity, at least in our journey, it for sure started with money, and there wasn't funding to build it up, right? So we actually had to liquidate some assets in order to create some capacity. So I don't know if that's a formula that can work for all nonprofits, but it may start with money within the sort of the way the system's currently designed. But on the other hand, like we've done this in the past, right? And the West Don lands, for example, 2 affordable housing buildings down there, they were delivered as turnkey to the nonprofits. And then the other thing is that I think up until basically the early 2000s, governments were more willing to backstop charities and nonprofits that were developing. And I think now there's a view that, or a view in, as I mentioned, in an environment of lower rates, and where I think where costs were not where they are now, that you could sort of make a deal with a private sector developer and offload the risk entirely on whether the project will succeed or not. So that's just a choice that you know, that gets made. And so I don't know if I'm in the best position to actually, somebody would have to tell me what, you know, what more should we be doing, I guess. Maybe that's a cop out. I don't know. Is that a cop out, Sheila?
No, I don't think it's a cop out. I was actually going to take that question and flip it actually to Siri and Nick,
Yeah, nice.
within combination to also say, you know, from the government funding side, I think you answered this a little bit, but what else is needed to get Dream and Ellis Dawn and other private organizations to further invest in affordable housing? And I think that that's maybe part of the, it's sort of two-pronged of what is needed from the government. I think we've spoken to that a bit, but also what do you think it would take for other private organizations to sort of take the leap that you all have when thinking about these types of investments for your companies as sort of long-term holds, investing in affordable housing, but also speaking to Nick's question of, you know, what do you think it would take for the nonprofit sector to be able to scale up?
I think for us, it's one thing is I was just thinking different models that we have looked at, and I think to address the question, I would say there's different models to what Gotham's point is. Like, it's not a one size fit all, and I think depending on different levels of who the non-for-profit is, I think there's different ability to scale, balance sheet strength, also expertise, because some might have the strong development management, some may not, and then accordingly you create the partnership model. I think the ask to governments would be, when we create these innovative partnerships for more flexibility, and I think that just in terms of, it cannot be the rigor of set forum and saying this is the model that works for all. It's making sure that you have different programs and different structures that could work through. From our perspective, as I mentioned, again, just to reiterate, like, we'll be in the affordable housing sector. We're in the affordable housing, and we'll continue to do that. A good case and example that we have just in terms of partnership with the non-for-profit is, of course, we've worked with Ottawa Community Housing, where we really strata title and provide that to Ottawa Community Housing. The other is, again, going back to my case study of LeBreton Library Parcel, again, with multi-faith. It's like how you're wrapping around with the expertise of the non-for-profit partner. And I think from our perspective, we've always treated as equal partners, because when you're looking at the end users of what they need, is we want to make sure the design, the architectural aspect, as well as the public realm, takes into consideration who the potential end users are. So I think for us to continue to do that, so we're in the sector, so we are intentionally proceeding these partnerships. But I think that what the governments can really do is also expedite in terms of approvals. I think there was one question on that, expedite in terms of approvals. And again, at LeBreton Library Parcel, we've just got the rezoning, everything, it's worked really well. And that support from the municipality, from the city of Ottawa, was incredibly important for the scale and the milestone and the deadlines, because the more we delay in this economic environment where rates go up and down every time, it can kill a project just because of timelines. So we may have a great innovative partner, but if the rates go up by another 300 basis points, another percentage, the project is done. So you can't create that. The second, I would say, just in terms of, one is approvals. The second, I would say, in terms of working with the federal government in terms of whether it's the National Housing Co-Investment Program or with the RCFI or other programs, is again, clarity, but also in terms of speed. I think speed should not compromise in terms of governance, etc. But I think right now is, in this environment that we are in, speed is important. So we're not saying fast and cheap, like we mentioned earlier, Gotham, but I think here at this point, speed is important. And I think those are the considerations that we need to take. And for the non-for-profit, grants are extremely important. So it's like, how do we make sure that the timing between the councils improving the grants versus the timing of the projects, and how do we align ourselves there? So again, I go back to the point as how we collaborate, but we have to recognize the tool, and we have to be mindful of the time that's required for us to scale up in partnership with non-for-profits. I don't know, Gotham, if that makes sense, but.
And that's a good point about fast and cheap, because I don't necessarily include the timing it takes for land entitlements in the fat. Like, it really needs to be faster. I 100% agree, Sarah. That's a cost. It's not cheap. It's a cost.
Yeah. Well, it's interesting because there's one question up here that we're not going to answer, but it's like the role of planning approvals. And I think that comes into play. So planning and approval reform, to think about and consider the funding of the project is for affordable housing or for another inclusive or accessibility group, and that maybe it's something that needs to move faster through the system. Nick, did you want to flush out the rest of that question for yourself? What else is needed?
I think the thought that I had, and this is something that we really would like to see across Canada, and how the application would work in Toronto might be a little bit more challenging, but a little bit more comprehensive in the collaboration at government levels. And I'll give you an example. You know, you're building a hospital in a remote community that doesn't have much of a population, and therefore does not actually probably still has a shortage of housing, to be quite honest. But you're moving in 400, 600 workers to build this hospital, and then you would expect that, you know, that community to grow because they now have a hospital there, and there's going to be commercial around it and build. And what we're finding is that, you know, that hospital will be thought of, but the interconnectivity of the community has not. And because no one has thought about workplace accommodations, for instance, right? So, you know, we advocate, hey, have you thought about workplace accommodation? And it's almost like, you know, like players like CMHC and the Canadian Infrastructure Bank and whatever infrastructure procurement authority, we find they work in a lot of pillars. And I think that where we would get involved in, because of the nature of Ellis Dawn, where we're vertically integrated infrastructure developers and now affordable housing developers, is actually think along those lines. Like, is there a way that we can build this community? It's not just the single asset, but how do you build that interconnectivity together? And then are there the proper direct lines to actually think about how that would all work? Like, one of the examples I was thinking about, there's a far north community that professional services center where they need you know, alcohol counselors and psychologists and physicians and all these different types of things, and they can build that, from our understanding. But the reason why they're holding off on it is because they don't know how to get where these professionals actually live, you know. And that's insane to me, because that really just takes a phone call or two, and well, it's probably not that simple, to be honest, but it's that type of thing. And then you could have a company like ourselves, or I won't say who the other ones are, I just want you to think of us. But you see what I mean? It's that interconnectivity that I think, once we figure out this housing problem, how does it all work in a community? What does that interconnectivity look? And it takes communication lines that I believe don't exist yet.
I think that's a really key point, Greg. I'd say that in a lot of the communities that I work in the north, definitely in Toronto as well, but I think particularly in the north, the different funding silos in terms of infrastructure and housing are completely disconnected. And so right now, the crisis in many areas of the north is that there's housing being supplied through the Rapid Housing Initiative, but there's no service lots to actually house them on. So Indigenous Services Canada, maybe I'll put that on my wish list, would be to actually think of it more holistically, to be able to develop infrastructure along with the housing together in a way that
Exactly. Yeah. That's exactly what I'm saying. Yeah.
I think, Sheila, just one point I want to make that we haven't really discussed or really put on is we have to recognize that as we talk about scale and need for affordable housing, we have to recognize there's a labor shortage, and really thinking through where we need collaboration with all levels of government. Again, to your point, holistic approach, but there is a shortfall of skills. So I was very pleased with the immigration announcement of it just in terms of labor. But again, to Nick's earlier point, is we want to make sure we are able to house it. So it's circular in nature, but we do have to recognize that labor and skill pool is something that we need to also be mindful of a constraint.
Right. Well, thanks so much for all of you for participating today. I think that it's been a really rich discussion. You know, thinking about partnerships, I know there was one last question from some of the audience saying, you know, theme of partnerships, what is one thing that's critical to bring new partners to the table and continue to success of the partnership? I was going to say the ability to think outside of the box and communication. Really, when we're thinking about the communication that our panelists have talked about of new innovative ways of collaboration, that's one thing that really came across a lot when we were speaking together. So on the behalf of everyone here on the panel, when we think about the Toronto Housing Summit and the future of rental housing, thanks so much to Nick, Gautam, and Searing for participating in this lively discussion, and for the audience for coming to listen to us and to think about the new ways that these communities and these companies are taking leadership to moving forward together to create the future of rental housing and affordability in Toronto. Thank you for your work and for participating today.
Thank you.
Thank you.
Thank you.